The Start Your Own Business podcast. Hear inspiring startup stories and get reliable expert advice on how to start your business and get off to the best possible start. Brought to you by Startup Donut, helping small businesses succeed.
Hi there, thanks for joining us and welcome to the Start Your Own Business podcast. My name's Fiona and I'm your host. You're listening to episode 1 of our special 4-part mini-series brought to you in association with Tax Assist Accountants. It's all about making tax digital for income tax. In this episode, we're asking the big question: how will making tax digital for income tax impact you? You may or may not have heard of it yet, but if you're a sole trader or private landlord, this new system will radically change how you report your income and expenses to HMRC. It's going to affect millions of people and the process officially begins on the 6th of April 2026. So what exactly will change? Under the new rules, how will sole traders and landlords legally be required to keep financial records and submit tax information? What new responsibilities will this bring? And what about the traditional self-assessment tax return? Could it soon become a thing of the past? Here to answer these questions and more is Chartered Certified Accountant Joe Nockels of Tax Assist Accountants, the sponsor of this episode. Before we meet Joe, let's take a quick look at how Tax Assist Accountants can support you as you get ready for making tax digital.
Are you a sole trader or landlord earning over £50,000 a year? Then making tax digital for income tax is heading your way, and the deadline is the 6th of April 2026. Don't wait until the last minute. Tax Assist Accountants are here to help you get ahead and stay compliant. With local offices across the UK, they offer face-to-face personalised support to guide you through the entire process, whether it's understanding what MTD means for you, getting your finances in order, or choosing the right tools. With MTD compliant software to digitise your records and make submissions simple, you'll be fully set up and ready. Even better, Tax Assist has a range of packages designed to suit different needs and budgets, so you'll only pay for the support that's right for you. It's expert help made local and personal.
So it's time to meet our guest, Joe Nockels. Joe is Head of Group Practice Capabilities at Tax Assist Accountants. Thanks for joining us, Joe.
Thanks for having me, Fiona.
So the first question really is the very sort of first question that anyone might ask is, what exactly is making tax digital for income tax?
So making tax digital for income tax, can we abbreviate it also to MTD for income tax? Because I'm going to trip up on that all the time otherwise. But it's quite a big change for sole traders and landlords in terms of how they report to Revenue and Customs or HMRC. So at the moment, we're probably used to submitting an annual self-assessment tax return. But those that are affected by MTD for income tax will need to keep digital records and send quarterly updates to HMRC using software. That's the critical part here. And the whole premise behind introducing MTD for income tax by the government is to try and reduce errors and improve tax compliance. By making the process a bit more manageable. You know, you're updating it throughout the year rather than this sort of big spike at the year end. And it applies at the moment to those who earn income from self-employment and property. And as I said, critical, it requires the use of software to keep digital records and submit quarterly to HMRC. And it's been gradually phased in from April 2026, April next year.
Yeah. So who will be, the next question I suppose is, who will be affected from April then? You said that it's based on income.
Yeah, so as I said, it's being phased in. So from April 2026, it will be those with combined income from self-employment and property that exceeds 50,000, and those will be expected to join from April 26. The following year, in April 2027, that threshold lowers to 30,000. And in April 2028, it lowers again to 20,000.
Okay, so listeners might not be affected straight away, but eventually it's likely that all sole traders and landlords will be affected. Is that what you're saying?
Yes, that's the plan, I would say. With that lowest threshold of 20,000, it's likely to affect a lot of people.
And what about partnerships? Are they involved? Are they sort of included in the rollout?
No, they're excluded at the moment, which I think we found with MTD for VAT as well, way back when. They are in the pipeline, but there's no time frame around that at the moment whatsoever.
Yeah. And will there be any exceptions for people, as there was for making tax digital for VAT?
Yes, there are. So I'd encourage you to review your affairs, and you can speak with HMRC to see if you might, be able to avail of some of these exceptions. There's the sort of digitally excluded cohort, so you might have a case there to be excluded. And there are some exceptions. So, for example, ministers of religion, Lloyd's underwriters, those in receipt of married couples allowance or blind persons allowance as well. So there are some exceptions to this.
Yeah, but broadly speaking then, we're saying that if you're a sole trader or a landlord and you've got income from either of those, at some point in the next 3 years, you will fall under the scope of making tax digital.
And let's be clear as well, you have to combine those two sources. So, for example, if you had 35 from self-employment and 20 from property, you would be caught because combined, you're obviously tipping over that 50,000 threshold.
Yeah. Okay, so those who have got slightly more complicated reporting requirements where they've got income from different streams, they will fall under it as soon as they fall over the thresholds. 50,000. Okay, so you've mentioned this briefly already at the beginning. You mentioned using software to keep records and to file your information with HMRC. Can you explain a little bit more about that for us, please, Jo?
So there's a few aspects to this. So firstly, you've got to keep your bookkeeping records digitally. And so what I mean by that is the date, the value and the category, and those categories are denoted by what's currently on the tax return, the boxes, that particularly around the expenses area, for example. So that's one aspect of it. You've got to keep your bookkeeping records digitally. So the days of a manual handwritten cash book, if you're caught within the scope of MTD for income tax, those days are gone. Okay?
Right.
Then there's the fact that it will need to be able to submit, the software will need to submit quarterly updates to HMRC. So every quarter you'll be sending off that summary of your income and expenses off to HMRC. And the third part is that you'll have to submit your tax return digitally as well. So previously you might have been logging on to gov.uk and putting in your gateway details and submitting your tax return on the government's website. Well, again, if you're caught within the scope of MTD for income tax, you will have to use the software itself to submit that tax return. So you will no longer be able to log on to HMRC's website to submit your year-end return.
So we're saying that manual bookkeeping as exists at the moment is no longer possible.
Yeah, that handwritten cash book.
That's no longer possible. What about someone who's currently using, say, an Excel spreadsheet or something to keep their records? How can they still continue to do that?
It's a great question. Great question, because if you think about how you might lay that spreadsheet out, you will have date and the value and the category, I would imagine. So spreadsheets can still continue. But there's a bit of a caveat around that, in that obviously you've got this spreadsheet. How does it communicate with HMRC? So you'll need to acquire something called bridging software. That's what HMRC badged it. That basically maps your spreadsheet into HMRC's records, so that it can suck that spreadsheet in and spit it off out to HMRC each quarter.
Okay.
You'd still have to consider also how you'd submit that year-end return if you're caught within the scope of MTD, because that solves, the bridging software solves the quarterly updates, but then the tax return obviously needs to be submitted, digitally as well. So that would be something you'd need to figure out as well with software.
So a better solution really from the beginning, if you've either not got digital records already or you're just starting your business, is to start off on the right foot with compliant software.
Yeah, probably. And there are so many advantages as well to managing your business or your property portfolio on some software. You can keep tabs on customer balances and you can see your profitability. But yes, I would say if you're just starting out, let's go with our best foot forward and start off on software, I would say, particularly, although you might not be within the scope of MTD initially from that 50,000 threshold. Obviously, with it phasing in, you're likely to get caught within it in the next few years.
Yeah, and I suppose if you need to switch over and move to digital records, the sooner you start doing that, the more in the flow and understand the ins and outs of entering all of your records you will be by the time it comes to next April.
Yeah, I mean, for those business owners that are perhaps VAT registered, MTD for income tax might not be a big disruption,
right?
Because they will, as you say, they'll be used to digital record keeping already because of MTD for that, and they'll be used to reporting quarterly as well.
Yeah.
Those that perhaps have been using handwritten cash books, that will be perhaps a bigger sort of change management process, perhaps.
Yeah.
And you're totally right. If you're just starting out, let's just start within software, and then we're all sorted and lined up for the future.
We don't have to transition either.
Correct.
End up entering everything twice.
Yes, yeah, absolutely.
So in terms of software, will HMRC be producing software that people can use, or will people have to go out and look for commercially available software?
Yeah, a bit of a controversial point. So HMRC will not be providing anything themselves, so you will have to go out there and source something. But there are some free solutions available, and HMRC have obviously been working with software houses as well. So up on HMRC's website, there is a page where you can see which products are compliant with MTD for income tax. So you must go and check that if you're looking to source your own software.
I suppose equally, if you already have software, it's worth checking now whether yours does meet the requirements of MTD.
Yeah, sure enough. I mean, a lot of the software houses have been working on this for years.
Yeah.
Because MTD for income tax has been floated for quite some time now. So you should find, hopefully, that it is already compliant. But yes, absolutely. If you're already using software, go and double check that it fits the bill.
Yeah, lovely. So can you tell us a little bit more about digital requirements, the reporting requirements and record keeping requirements under MTD, and how that might be different to where we are at the moment?
Well, as I say, it's pretty straightforward. It's date, it's value, it's category, and you'll be. My advice to you would be record your transactions as you're going in a timely fashion, so that you avoid that, evening sat at your desk typing everything out. And then we will, each quarter, you'll be required to submit to HMRC. And a bit of a change from what we see with MTD for VAT. The quarters for MTD for income tax are defined by HMRC. So they will be March, June, September and December.
Yeah.
So those will be the quarter ends that you'll be filing for. And then in terms of the filing deadline itself, it's a month and 7 days after the period end, just like it is with VAT. So, for example, with the March one, you'd be filing on the 7th of May,
right.
So a month and 7 days after the period end. So that will be going on. And then you'll do your tax return, albeit through software now rather than on gov.uk, and normal rules around the filing deadline for that. And it's important to note as well, although we're reporting more regularly, it doesn't change the payments for your actual tax liability. So they remain unchanged at this stage.
Yeah.
So, if you're paying payments on account, they'll fall due at the 31st of Jan and the 31st of July, and then tax return at the 31st of Jan as normal.
Okay, so those dates don't change in terms of when
Correct.
you have to submit the paperwork and when you have to make your payment if you owe tax, or equally claim a rebate if you've so refunds should come back quicker as, once HMRC have received your return and they've processed it, that should come back fairly quickly.
Can never be certain though, because you don't know what the workload's like at HMRC. So you might be waiting a period, but refunds shouldn't wait until the 31st of January.
So presumably that's one of the benefits of making tax digital for sole traders and landlords, is that they will see as they're going along throughout the year whether they're ahead of sales or ahead of rental income against plan, I suppose, and be able to put away more money or perhaps not squirrel enough as they're going, because they'll have a live update to some extent.
Yeah, so when you're looking at software, do have a look at its capabilities, because if you are keen to get those insights into your business or your portfolio, make sure that it's offering you the reports that you're after. You mentioned budgeting that just then, for example. Not all software licenses would have the ability to suck in your budget, so just be absolutely certain with the functionality within that software. But yeah, I'm really positive about the change. I appreciate it's going to take perhaps a bit more time, and there might be a bit more costs. But if you're hungry for growth, hopefully this will give you the tools and the data with which to make better decisions. About which products are selling well, or as you say, perhaps yield from your particular portfolio and things like that. And tracking customer balances, as I keep saying, because cash flow, you're absolutely right, is king. And arrears for the landlord, in comparison. So there are loads of benefits, and as I said, if we keep our records in a timely fashion, just little and often, just to keep updating them as you're going, it hopefully shouldn't be too much of a burden. Yeah.
Have you got any other sort of best practice tips in terms of keeping a record of your income and expenses, other than staying on top of them and doing them as you go? Any other tips for our listeners?
Yeah, so I appreciate that whilst I've encouraged everybody to do it as we're going, life gets in the way. We get that life admin just disrupting everything. So my advice would be, if you've got a receipt and you think, the description from the supplier is not too good there, it's probably not going to remind me what that's for, make yourself a little note, handwrite it on the receipt, just so that when you do process it, you can remember what it's for. So, but it's so simple, but I love it.
Yeah.
In that regard, if you've got loose receipts everywhere, get yourself a lever arch file and a hole punch.
Yeah.
Okay, so just so that everything's organised and it's all together. Some of the emerging technology that people should be aware of as well. You do get receipt scanning software these days, which is marvellous. We use it here all the time. So it might come in the form of logging into a website, and you can push your receipts off to that. And basically, it does what I've described. It uses OCR technology, so optical character recognition technology, to peel off the date and the value and try and categorize it as well if it can. And so it's basically doing that work for you, and they can come web-based, they could come on an app on your smartphone. So just a bit of a time saver there. And of course, if you've done that, it keeps an image as well of the receipt. So you could, you've not got to worry then about losing anything.
How many times have we done that? Got in the car, filled up, and then think, what have I done with that? Rummage through your wallet or rummage through your handbag, and it's gone. And then you think, I can't claim that now.
I know. And they're usually dead straightforward to use as well. If you can use the camera on your smartphone, you can use a receipt scanning app. That would be, that's always my advice to people. A big time saver, and perhaps one that's neglected, I would say, by some business owners and landlords, is bank feeds.
Yeah.
So let's just unpack this. So obviously, some of us will be familiar with online banking. Now, what you can do with online banking is potentially sort of plug your bank, if you like, into your bookkeeping software, and your bookkeeping software can then start pulling the transactions through direct from your bank. Now, it has no ability to, or they shouldn't have any ability to transact on your bank account. It's literally like, if you remember the good old days where we actually had bank statements, it's like the software's a copy address for the bank statement.
Right.
So all it can do is see the transactions, can't transact on it. But perhaps we might not be using a business bank account at the moment. We might be using one of our personal accounts and running everything through there for the household and for the business or the property portfolio. So it might be time to think about separating it out into a proper business bank account.
Yeah.
And then that bank feed is nice and clean and it's just business transactions.
Yeah.
And we won't get muddled up with all of the supermarket receipts and what have you.
Yeah.
As I said, I can't stress enough, just do things as we're going so that you haven't got that last minute panic.
Yeah, absolutely. Guilty as charged on that one. And like you say, people, when you're running your own small business or you're running your property business, you're busy. There's always pulls on your time. And I think several of us have left some things too late. And, you then end up, there's more risk of making mistakes. There's more
Absolutely.
risk of, categorising things in the wrong column or of missing something completely. When you've got allowable expenses, if you're doing things in a hurry, you could be at risk of, paying more tax because you haven't claimed everything that's allowable. So it's a really great tip, really, is little.
I know. I don't know about you, but sometimes the purse is bulging with receipts and you think, oh, I'll just throw those all in the bin. And you think, oh, no, I needed that one.
Yeah, where's it gone? Well, I suppose if you've got one of those apps now, there's no excuse. You should be able to do it as you go.
Yeah.
So I suppose
absolutely.
really that sort of takes us back to one of your earlier points, is about have a look at the different types of software that are on the market, decide what the list of priorities are, and then look through the HMRC list and see which ones are a best fit for you.
Yeah, and there's other things as well to consider. So think about what you need.
Yeah.
What do you need to help you grow? But also, there are some quirks that you need to think of. So, for example, the cash basis has become the default, where we're sort of recording transactions as they're passing through the bank, for want of a better phrase.
Yeah.
But you could still be on the accruals basis, where we're perhaps recording things more based on the invoice date. So you still have the option to pick cash or accruals, but not all softwares can handle both.
Right.
So once you know which basis you're using, make sure that it lines up with the software. Yeah. Also think about things like even your year end. So it's quite common these days for sole traders and landlords to have a 5th of April year end to tie up with the tax year.
Yeah.
Or you might have a calendar period end, so, December or something. Just make sure, again, that your software can handle a 5th or a calendar month end.
Yeah.
A calendar should be there, but 5th might not be in all cases. Obviously, the software houses have got a huge suite and array of different subscriptions. So some, sort of more entry level. And then there are others that have got all the bells and whistles and packed full of functionality. So even things like, do you need the ability to raise sales invoices for your customers? Might not be in all subscriptions. So make sure that if you need it, if you're particularly a service-based business, perhaps, that it's there. We mentioned earlier about those with a mixture of incomes. So perhaps they've got self-employment and property. Some software licenses can manage both in one license which keeps the cost down, of course, and it's just everything's in one place. Then, if that is desirable, again, you're going to have to root that out with the software. Joint property owners, we haven't mentioned those, but they're an added complication because when you're submitting your quarterly update, if you've got property income from the UK, whether it's one property or 40, it's combined into one quarterly update.
Right.
If you've got foreign property income, that's also combined into one quarterly update. If you've got self-employment, each self-employment requires its own quarterly update.
Okay.
So if you had somebody just with self-employment and property, they would require 2 quarterly updates. So if and with joint property, each individual is required to file their own independent quarterly update.
Yeah. Okay.
So if you have got a portfolio that's shared perhaps with a spouse or another family member or something like that, and you're both required to file quarterly updates, you do need to make sure that that's baked into that software. You mentioned multiple self-employers, CIS contractors.
Right.
That's they are, with that 50,000 threshold, they're quite likely to get caught in the first wave of MTD for income tax. So some products have sort of built-in functionality that really helps CIS subcontractors manage their payment and deduction statements all ready to go. Yeah. So that's something. And of course, cost. Have a look at the cost. Now, there are a lot of deals out there at the moment with big discounts, but just make sure you understand what happens to the subscription after that discounted or free period ends.
Yeah.
Because it could get expensive.
Yeah. It all sounds like it's quite a complicated picture there. Would you advise listeners to, if they've got a bookkeeper or an accountant, to seek the advice of their accountant in terms of what might be the best fit for their business model?
Yeah, absolutely. I mean, at Tax Assist, we've designed 3 sort of packages around our clients. So we've got something called Go Solo, which is perhaps for the tech savvy that are already using software, that are quite comfortable with it. So we're just there really to support at year end when we come to do the tax return. And then in the middle tier, we've put together with what we've called check and file.
Right.
So perhaps you want to do the bookkeeping and just stay in control of that, but we'll be there each quarter to support you on the quarterly update, and then of course do the tax return. And then we've got full service as well. So where you know what, you're like, I'm better off managing my business and growing my business. That's where my time is better spent. You take care of all my compliance needs, all my bookkeeping. So yeah, absolutely. Speak to your bookkeepers, speak to your accountants, and start figuring out what solution works for you. You know, what's your appetite to want to do these things? Yeah. What you're be honest with yourself about your capabilities, and you know, particularly those, as we said earlier, that are transitioning perhaps from a spreadsheet or from manual records. What is that hump going to be like to get you over the line?
Yeah. So we've talked quite a bit about the quarterly updates. What happens at the year end? You know, what's replacing the traditional, here's the paper tax return and I'm submitting that to HMRC?
So as we mentioned, the tax return has to be done via software these days. So what will happen is it will pull down the figures from your quarterly updates from HMRC. You can then make any year-end adjustments. Perhaps there's some reliefs or allowances, capital allowances, and perhaps there's some disallowable items. So prepayments, accruals, make those adjustments, and then the software will file your return off to HMRC.
And it's at that point, presumably, that you then get your final tax bill and you make your payments?
Yes, you can do. Obviously, just no later than 31st of January.
Yeah. So a good thing for people to remember is, although you're doing the quarterly returns, that date remains unchanged. Yeah. And presumably, you know, there will be penalties, you know, if you don't, as there are now, if you don't file on time and pay on time.
Yeah, so we're currently in a sort of pilot beta phase with MTD for income tax. So if you opted to go early, there shouldn't be any penalties arising in this beta phase. But from April 2026, penalties would come into force. And they've designed a sort of new penalty regime around MTD for income tax as well. So it's going to work a bit like a driving licence, effectively. So you can have a certain amount of points and not too much, you know, consequences to that. But once you hit that cap, then penalties could come into play.
Yeah, and they can rack up quite quickly if the unpaid bill or the length of delay is sizable.
I know, and I hate to see it, Fiona, because it's such a waste of money as well, and unnecessary. So yeah, absolutely avoid penalties in all walks of life, but particularly on your tax compliance area.
So you've covered a little bit about how Tax Assist can help, you know, your clients comply with the requirements of MTD. I wonder if you could go into that a little bit more for listeners, please.
So we really like to be client-centric and think about the client. So as I say, we've designed packages that we think are going to fit most people's needs. So We're starting with Go Solo. So this is for the really tech savvy that are really comfortable with bookkeeping and what's required. And they're going to be merrily plugging their receipts and their income into the software, and they will file their own quarterly updates as well.
Yep.
Come year end, though, we're there to support them with filing the tax return as we normally would with our clients, of course. Then in the middle, we've got check and file. So this is where a client's fairly comfortable with doing the bookkeeping on a day-to-day basis, but when it comes to the quarterly update, they'd like some support, so we can step in there and provide some guidance and check over what they've entered, and then we can take care of the filing, and of course we'll do the tax return at the year end as well. And then there's the full service, where we'll do all the bookkeeping and do all the quarterly updates, and we'll do the tax return, so everything is taken care of, and you really do. Other than perhaps raising your own sales invoices, because obviously we won't be there on a day-to-day basis in your pocket. Other than that, we'd take care of absolutely everything else.
That's the equivalent of turning up at the office with a shoebox full of receipts and saying, help!
I know. And the thing is, people, the profession is going to get busy off the back of MTD for income tax. So if you've been doing it yourself up until now, and you're thinking, actually, do you know what? I need to get a professional to help me out with this. Get ahead of that, because they might be inundated with inquiries and not have capacity to take on new clients.
Yeah. So before I let you go, what 3 things do you want our listeners to take away in terms of getting prepared for making tax digital?
I think it all centres around software, Fiona. Just start looking at what you need out of software if you're going to do it on your own. What types of functionality, what can really change your life for the better, change the way that the business grows. It all centres around that. I suppose the second piece of advice would be bank feeds as well. Start having a think about how you've arranged your banking affairs around your business or your portfolio, because a bank feed is going to save so much heartache in terms of automatic updates to the software. Big time saver there. And just don't leave anything to last minute. Don't leave it to last minute to start having a think about MTD for income tax. Think about whether you need a professional, and if you're going to do it yourself, goodness me, do those updates to software real time, and don't leave it to the last minute when we're panic stations.
I think that's always great advice for anybody. Little and often.
Absolutely.
Save the headache.
Yes, absolutely.
That's brilliant. Before I let you go, Jo, can you tell people where they can find you online and where they can find out more about Tax Assist Accountants?
So I would say hit up our website, taxassist.co.uk. There is a phone number on there. There's also a contact form, so we can give you a call back. You can find us on social media as well. Absolutely. Most channels that you could think of will be there.
Fantastic. And we'll make sure we share links to all of that in the summary notes that will accompany the episode, so people can find the links there if they want some more information. Thank you so much for your time today, Jo. That's been really interesting, and lots of information there to help people start preparing for making tax digital. So thank you very much.
No problem. Thank you, Fiona. Thank you.
Making tax digital is coming, and even if you're not affected by the first phase in April 2026, if you're a sole trader or landlord, sooner or later you're likely to come under the scope of making tax digital. As Jo's explained here, you need to find out if and when you'll come under the scope of making tax digital so that you can make sure you're ready when the time comes. You'll need to check that you've got compliant software or a suitable way of submitting your quarterly digital updates. And if you're at all unsure about what's required, you need to seek advice early so that you can be ready on time. We'll share links to Jo and to handy resources on making tax digital from across the Donut sites in the summary notes. And you can also learn more about Tax Assist's friendly local accountants and how they can help you get ready for making tax digital. You'll find the summary notes at www.startyourOwnbusinesspodcast.co.uk. If you'd enjoyed the show, please hit follow. It'll make sure you're notified about new episodes as soon as they drop. All that remains is to thank Jo once again for taking the time to talk to us today. Until next time, all the best.
Are you a sole trader or landlord with combined income over £50,000? Big changes are coming your way. From the 6th of April 2026, making tax digital for income tax becomes mandatory, and getting prepared now is key. That's where Tax Assist accountants come in. They specialise in helping small businesses and landlords like you make the switch smoothly and stress-free. With face-to-face personalised advice, Tax Assist will guide you every step of the way, helping you understand exactly what MTD means for you and your business. They'll also provide MTD-ready software to help digitise your records, making it easy to stay compliant. And with a range of affordable packages tailored to your needs, you can choose the level of support that's right for you. Whether you want full management, a helping hand, or prefer to stay in full control. You can get free advice on MTD and how it may impact you by signing up to Tax Assist's client webinar. You'll receive expert guidance on how to digitise your records and meet your obligations, as well as the opportunity to ask any burning questions. Register for your free webinar place by visiting taxassist.co.uk/resources/news/MTD webinar today.